I welcome all the viewers to this program of Inse Miliye, the YouTube channel of Insurance Institute of India. Today we have with us Mr. Abhay Tewari. Let me introduce Mr. Abhay Tewari, Managing Director and CEO of Star Union Dai-ichi Life Insurance, more popularly known as SUD Life. Mr. Tewari is a seasoned actuarial professional with more than 22 years of experience in financial services, with a dominant part of his career in life insurance. He has held senior leadership positions in the actuarial function in SBI Life Insurance and Edelweiss Tokyo Life Insurance before coming on board SUD Life. Mr. Tewari holds strong expertise in actuarial operations, including designing of products, pricing, reserving, and capital modeling. He brings with him rich experience in research, reinsurance operations, and regulatory reporting. Mr. Tewari Saab is a fellow member of Institute of Actuaries of India with investment specialization, as well as fellow member of the Institute and Faculty of Actuaries of UK with life insurance specialization again. He is also CFA charter holder from CFA Institute, USA. Mr. Tewari has worked as chairperson of advisory group of professionalism, ethics, and code of conduct constituted by the Institute of Actuaries of India. Currently, he is an esteemed council member of the Institute of Actuaries of India and also chairs the education committee of the institute. Actuarial career is a great for those who enjoy analytical problem solving and developing creative business solutions. Tewari sir, welcome you to this 24th episode of Inse Miliye, a series of short-term interviews of leaders and opinion makers in the field of risk management and insurance. Thank you for joining us. With your permission, I would like to ask you a few questions about the actuarial profession.
Thank you for this kind opportunity, and it's a very big privilege and honor for me to be a part of this platform. I think I would also like to wish a very happy New Year to all. Please go ahead. I mean, I think.
Thank you, sir. Thank you, sir. Sir, we know actuaries have to play a major role in insurance business. Are there career opportunities for actuaries in other professions as well?
Okay. Okay. Good start. I think most of the actuaries have come up. If you see in India, either they have been working with LIC of India or some of the general insurance companies. And over the last, say, 20 years, you see a lot more students pursuing this as a career. Most of them initially have been absorbed by insurance companies, whether life insurance and general insurance, sometimes also with the broking firms. But I think to broad base this profession and to see that whether it can contribute to other financial services, let me just give you a brief background of what actuaries otherwise do. I mean, and what is this or how this actuarial science is a little different, or what role it has to play in the development of the finance and the economics. How is it applied into all these areas? Actually, this actuarial science basically is nothing but an application of the theoretical mathematics or statistics which we learn in the college or the school when we start understanding mathematics and start utilizing or applying it into business. That's where the actuarial science starts becoming very important or very relevant. So I would say that it is more of applied mathematics and applied statistics, and main applications have been in the area of finance and risk. And I think that is where and if you see finance and risk, they have also evolved a lot. Over the last say 25 years, 30 years, the learning and the understanding of finance and risk has grown multifold. I mean, if you see the derivative markets, they are very highly evolved. So capital markets have become very highly evolved. So what is then different in the actuarial science is what I wanted to dwell upon a little. I think most of the discounting factors or the present value factors which are being used in the world of finance, they are largely interest rate based. They use interest rate to discount the cash flows and to arrive at the equivalence of the cash flows, whereas actuarial science also allows for the probability of that cash flows to be factored into the model. So whether what is the certainty or uncertainty of that cash flow to happen, when that is also factored in, I think that financial mathematics converts into actuarial mathematics. And so I feel that applications can be in very wide ranging fields of finance and risk, and enterprise risk management can be, is very important for all firms. I mean, whether they are manufacturing firms or energy firms or a financial services firm, they are applicable to every company actually. Yes. So ERM can be a very wide area where actuaries can be very, heavily involved. Data crunching is becoming very, very important these days. If you see earlier, the problem was that, we had very limited information and we had to extrapolate that information to predict or to say that how future can be, because we had some amount of information and we used to use that and then try to make sense of the future. But now the problem has reversed. I mean, now there is a huge or humongous, I would say, data which is being captured every moment. Now with that data capture happening, we need to now narrow down the data and to find meaningful interpretation of that data and also meaningful analysis and conclusion from that data. And I think that the role of actuaries can become very important, in that area, whereby in data capturing also, in data analysis also. So I think in IT companies, there can be a lot of scope for actuaries to get involved. I think, as I said, that enterprise risk management can be a major area of focus. So there are many emerging areas which are coming up. Actually, like say, now I see many actuaries involved in climate change, understanding, impact on environment of various factors, because that also again requires a lot of data crunching. So the skills can be, I would say, expanded in many different domains actually. But the methodologies and the techniques which you learn are from the basic mathematics and statistics, and and they are just applications of that learning. So it has a wider range of application, I would say.
So actuaries play a key role in life insurance product development as also business management. Is it true that actuarial inputs are not so very relevant in managing non-life business?
I would say the otherwise. I would say that the non-life business requires more actuarial talent and more actuarial skills, because the kind of risks and the variety of risks which we deal with in the non-life side is far more actually, because here if you see the life business, we are dealing with two important aspects. One is the mortality risk and the second one is the investment risk. Now the mortality risk, if you see, has largely been stable over the years, and it has been improving, showing an improvement in the longevity. So the trend is towards an improving longevity. Yeah. Whereas some of these events or major pandemic events or some catastrophes, they sometimes disrupt these trends. But overall, in the long term, when you see over 30 years, 40 years, I think the trends have been improving. Every 10 years, you see some small improvement happening on the longevity side, but that can be easily modeled and captured. But certain risks, like for example, on modeling a director's liability, modeling a cyber security risk, modeling a catastrophe or an event which happens so rarely that maybe it has not happened in, say, 1 in 100 years might be the possibility. So modeling those kind of tail events are more difficult, and non-life actually requires more actuarial inputs, I would say. I feel that the data which is being captured, as I said, every moment, that also makes the understanding of the risk much better, and actuaries will be capable to handle that kind of information and then make sense out of that information. So I feel that in the coming years you will see far more application of actuarial inputs in the non-life side than the life side.
Okay. Thank you, sir. Sir, actuaries work on models and scenarios. In your view, will actuarial inputs remain valid in the fast changing environment with disruptive forces affecting human lives and destruction of assets at an unprecedented frequency?
You are right. I think this frequency of such unknown events is increasing, and the severity of the damage is also sometimes very, very high, which makes it appear that the models may not be relied upon or cannot be relied upon. But such such major pandemic events or catastrophes, I would say that they have always been very difficult to model and difficult to capture through right pricing. Post such events, there is always an overreaction, whereby companies tend to dramatically change the models and parameters for pricing, and then there will be sudden surge in the pricing. My assessment is that as long as the long-term trends do not undergo a severe change, the models will still be very valid and will be very relevant. So the accuracy will keep getting challenged because such disruptions will challenge the accuracy, but it does not mean that the overall long-term trend has itself got altered or the direction of the change has started to reverse. So I would say that the models will still be valid and their predictability will keep improving actually as we learn more about such disruptions. So such events will actually make the model even more robust, is what I feel.
Yeah. Thank you, sir. Sir, Tewari sir, you are guiding academic institutions in making the learning more contemporary and effective through your presence on various committees. In your view, would there be a need to make changes to actuarial curriculum as use of data analytics and artificial intelligence is on rise in all businesses, including insurance?
Yeah, I think that the futuristic curriculum will merge the actuarial science tools with the huge computing power which technology has enabled us with, and will create solutions which can help people live longer and better. So instead of just pricing the risk, the idea is to reduce the risk and improve the quality of life and assets which we have. And this will require integration of technological developments which are happening, and the computing power, as I said, the softwares which are coming up. I think the actuarial science curriculum will be heavily incorporating these developments in the curriculum. And earlier, as I said, that the problem statement was how to extrapolate from very limited information. Now there is a huge plethora of information getting captured every now and then, and we have to make sense of and meaningful insights from that huge data sets which we have. So actuarial science curriculum will be incorporating a lot from data science, data analytics, artificial intelligence, and the computing power which the technological tools are providing now. So I think we will see far more advancement in the curriculum, which will be more of a fusion of technology and the basic mathematical and statistical tools which have been used over hundreds of years. So I think there will be a coming together of both.
Sir. Yeah, you are referring to maths and statistics. My question is regarding that actuaries use maths and stats to help find solutions to minimize risk. Right, sir? Is it true that one needs to be extraordinarily good in maths and stats so as to take the actuarial studies?
Yeah, I think extraordinarily good, maybe a little on the higher side. I would say would be a little bit of an exaggeration, but definitely a liking for these fundamental subjects is required. If we like maths and stats, we will be able to enjoy the actuarial curriculum also. So because actuarial science, as I said earlier, also it is just a application of some of these tools which we learn. The mathematical and statistical tools which we acquire. and it is actually more interesting because you are making the application of those mathematical and statistical tools, so it becomes more interesting. But you have to really have a fundamental liking for these subjects actually to really make a good application out of it.
Thank you, sir. Not all insurance company CEOs are actuaries. From your experience, does it help to take more considered decisions in carrying on the affairs of an insurance company because of learning of actuarial science?
See, I would say that the learnings as a student of actuarial science trains you to think more analytically, more logically, and critically. So it also gives you a good understanding of the overall insurance business model, and the associated risks, the products. It becomes really helpful while you are running the day-to-day business, because you understand asset side also well, the liability side also well, the risks. You get a fair understanding of the risk. On the investment side also there is a good training in the actuarial science curriculum, so you get a very good overall understanding of this business. However, I would say that the role of the CEO is more to do with people actually, primarily with our employees, our customers, our distributors, and also other stakeholders like reinsurers, regulators. So the true success, I would say, will come only when the people side is understood well and we start making our people successful. So it is like, maybe other businesses and this business, the role of the CEO, I would say, is common, in terms of making their people better. And a good CEO would first strive to do that. So understanding of the model and the business model definitely is a important trait, and I think actuarial science definitely trains us for that. But the people side really makes more successful CEOs, is what I feel.
Yeah. Sir, in your view, would loss reserving and actuarial valuation techniques that actuaries have studied and have been using undergo changes because of introduction of concepts such as group supervision, risk-based capital, and adoption of IFRS?
See, the basic framework and the analytical tools will always remain the same, but the way to represent the liabilities and assets and way to calculate the capital requirements, that is going to undergo a sea change. That will see a major change. So IFRS may make the balance sheet little more volatile due to the higher emphasis on mark to market in the beginning, but so in the initial period, people perhaps may find that it has become more volatile, but the standardization of the approach to represent the assets and the liabilities across different geographies may make it easier to understand and compare the financial results. So I feel that this change is imminent and it is going to happen, just a matter of time. The actuarial valuation tools will also evolve and they will adopt as to make the changes more smooth. But as I said, that the basic fundamental analytical tools, they remain largely the same.
Yes. Multidimension disciplinary competencies would be required to be gathered by aspiring youth to be successful in their career. Traditionally, some of the learnings are made together as a combination. Example, company secretary and law, engineering and finance, accountancy and management. What other area in your view should the youth studying actuarial science should be looking to learn along with it?
See, I think, as I said, the computer science, the programming tools, the data crunching tools, the data science, developments in the data science area, I think a combination of these with actuarial science will be a great proposition, will be a real winning proposition for the students. Because if they are good at handling the softwares, understanding what are the computing tools available to them, I think is an important pre-requirement now, or a prerequisite for becoming more successful in this field. I also feel that actuary plus MBA can be a great combination. Actuary plus courses offered by even III can be a very important. It really, I feel that it can broaden the perspective of a future actuary. So I feel very strong curriculum is being offered even by Insurance Institute of India. Similarly, some of the other MBA colleges which they are offering programs which are more general, but they build you up, and create a more rounded professional. So an actuary and MBA combination, an actuary or a finance or accountancy program combination, they all can be very successful. In fact, finance or accountancy programs merged with actuarial science, I mean, if somebody is pursuing it together, can be a great combination, because especially to address the changing requirements which you mentioned on the RBC side, the risk-based capital and IFRS side. So
Yes.
there, the accountancy profession and actuarial profession coming together can be a big successful combination for students to pursue. Then computer science, data science, and MBA programs also makes you a more rounded professional. So these can be great combinations, is what I feel.
This is my last question. Tewari sir, you have also been on various committees of Insurance Institute of India. We would like to know your views and ideas in making Insurance Institute examinations more relevant and trainings are more effective, with a view to make working of executives in insurance industry more efficient.
See, I would say that, as I mentioned earlier also, the Insurance Institute of India is doing one of the fantastic work, I mean, in that area to bring the knowledge of insurance to many people. Nowadays, I think there will be many executives in different companies, not related to insurance also, many IT professionals, they're also pursuing it, they're also understanding it. Insurance, tries to mitigate risk, tries to reduce risk, tries to, spread the risk. So it's a very important domain and area to understand. And I think a lot of people will be undergoing and taking these examinations to train themselves in that area. I feel one important thing which can perhaps create more interest can be adoption of technology, whereby the exams can be taken from home or anywhere. That kind of a thing will really help. Also, the evolution of courses, on how to read, for example, the financials of insurance company. A life company and a general insurance company may have again a very different understanding requirements, because one is more of, where the products and pricing can be changed every year, whereas in life insurance you give guarantees over 20, 30, 40 years. So there the reading of the financials can be slightly different. So how training people on how to read the financials, understanding the relevant accounting standards, changes on the IFRS side, risk-based capital side, this can be, if the institute adopts these changes and introduces this into the curriculum, I think it will enhance the attractiveness of the course. Also, I feel that if we start adopting the new programming tools, as I've been already mentioning in most of my responses, that if we can start incorporating also these into the curriculum, the software understanding, for example, you can have a exam on applying Python programs and to develop a model in those 2 hours or 3 hours. So these kind of things will perhaps create interest and will bring people from different domains into this platform. It can also help us analyze, the students will, when they pass out these exams, they will be capable in analyzing the data more efficiently, more effectively. Their risk understanding will definitely improve, is my feeling, if we introduce this the software learning in the curriculum itself. Because sometimes, when you join the industry, you don't have the time to go back and learn those tools. So if we can incorporate it in the examination itself, I think this will be a real success.
Thank you, sir. Thank you very much for your suggestions to the Institute of India. Once again, I thank you for your participating in this INSEE program today and providing insights into actuarial profession. Really, we have learned many new things about the actuarial profession today from you, sir. We thank you from wholeheartedly on my behalf, on behalf of the Insurance Institute of India. We also thank all the viewers. Last but not least, I take this opportunity, wish you and all the participants a happy new year. Thank you.
My privilege and my honor once again, for inviting me to this platform. Thank you so much. Thank you and wish you a very, very happy new year.
Thank you very much, sir. Once again.